Indeed. Now, to tell us more about those trade numbers and the chances of the UK trading its way back to growth, I'm joined now by Steve Hughes, the UK economist at the British Chamber of Commerce. Thank you very much for joining us today. These figures, on the face of it anyway, are more disappointing than we were expecting, aren't they?
Yeah, certainly disappointing. I'd say the visible goods, that's the physical goods that are exported and that kind of thing. The deficit there was worse than expected. The services side of things, the invisible trade, was better than expected, and so the deficits come in worse than expected. Now, is this necessarily a bad thing? Well, we've got to take all this in context. Realistically, the figures for trade get revised further down the line, and certainly the figures are from December as well, which is when we saw the big collapse in GDP and the adverse weather conditions affecting economic activity and affecting trade spending and generally trade more widely, which could affect the figures.
Indeed. Well, as Ed Balls said yesterday, though, in the House of Commons, the US had a similar kind of snow incident, and yet their GDP actually rose. I mean, overall, this isn't a particularly positive time for the government, is it?
It's not a particularly positive time, but you have to look at the underlying trends of these figures as well. And what we've seen since the start of 2009 is that exporting has actually increased at a relatively good pace. You know, it needs to go further if we're going to see a rebalancing of the economy, because going forward, we know that domestic demand and consumption is going to be weak as a result of the austerity measures. So going forward, we need more of our companies to export more.
So, I mean, exporting is key. I think everybody agrees on that. The question is, how does UK manufacturing learn to export more? And they really do need to learn some lessons, don't they? I mean, there isn't a big culture here of exporting.
There's not necessarily a big culture, that's true. I mean, what we know is there's a huge body of firms that don't export. Now, a lot of those can't export because they don't have the goods to export. It's not suitable for foreign trade. But those that do have the ability, say they've either got domestic demand to concentrate on, or they don't have the resources to export, which is crucial. So the government can intervene. It can provide products which aids the exporting ability of those companies through trade promotion and through trade finance products as well, which will aid those selling goods into foreign markets.
So what are the biggest obstacles then for a company that makes goods that could be exported but just has never done it yet?
So ultimately, you don't know what market you're selling into. You need to have a trusted distributor or trusted contact in those foreign countries. Now, when you're dealing within the EU, that's easier than, say, dealing with the emerging markets where there's cultural barriers, language barriers, etc. So it's finding those routes into those emerging markets which really is key to rebalance the economy. The German economy does it very well. They've managed to increase exports to those high-growth economies in the Far East, whereas the UK businesses have not necessarily exploited those markets as such.
Now, this is an area, clearly, where the government actually could intervene positively to help particularly smaller businesses. Is there more that they could be doing?
Yes, certainly. The government has certain agencies which helps exporters, the UK Trade and Industry and the Export Credits Guarantee Department. Now, a lot of businesses don't actually know these institutions exist, and they don't know the products they sell. Now, equally, the products that they have available aren't necessarily wide enough. Now, the products they should be offering to businesses exporting are there to fill a market gap or a market failure. They don't necessarily do that at the moment, which is why we'll see from the government this week moves to implement pilot products to address those specific issues.
And in terms of the pound, I mean, obviously a weak pound helps exporters, but we've seen in Germany that if you've got goods that people want, they become less price sensitive, don't they?
Well, that is true to an extent, and it all feeds into a capacity debate, how much we're importing into input prices as well. And really, we're undergoing a correction to really realise the benefit of that 25% reduction in the price of sterling. How long that will take is a different matter, and very much depends on global trade volumes and how much foreign markets want to buy our goods to be able to realise competitive forces and sell those goods abroad.
OK, sounds like there's a bit of work to be done. Steve Hughes, thank you very much indeed.